You're listening to the Cash Flow Academy podcast with Andy Tanner, your source for investing made easy. Here's Andy Tanner.
Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where investing is made simple, and we congratulate everyone for tuning in for this particular episode. You have people in your life that become mentors and they didn't know they were a mentor, and this often happens when you read books. And one of the very first authors I was introduced to years ago when I was trying to get to another level was Jack Schwager. He is best known for a book, he calls it Market Wizards, and it's really an interview with some of the most successful traders ever. And we're so excited because he now has Unknown Market Wizards, the best traders you've never heard of. And success leaves clues. He digs in, he talks to these guys, he gets access to these guys, and we learn what makes them tick. So I couldn't be more grateful to welcome Jack Schwager to the podcast. Jack, thanks so much for taking the time today.
Thank you, Andy.
Just to start off, let's start off and give people just a little bit of your background. You know, you've been a recognized, expert in the industry, futures trading, hedge funds. You've got a wide array of books, actually. Founder of Fund Secret. Could you talk a little bit about your background, your upbringing, how you became Jack Schwager?
Sure. I'll try to do a lifelong bio as quickly as I can here.
Okay.
To jump ahead to academic, I went to my course. I graduated with an economics degree, and then went to graduate school for an economics degree. Intended to go for a PhD, but dropped out at the stopped at the master's level, intending to go back eventually, but never did because I fell into a career, and that was that. So I started out as a research analyst in the futures markets. They were called commodities back then. There were no financial futures, whereas financial futures now are most of futures trading. And a couple of years into it, partially because I was writing articles, I got a job as a director of research, futures research. I did that for plus 22 years or so for different, firms like Smith Barney and Prudential, et cetera. And I spent, trying to keep this short here, I spent 10 years as a hedge fund advisory firm in London. I was the token U.S. guy, but I worked from the U.S. As you mentioned, I recently was involved in a startup called FundSeeder, which is the site is fundseeder.com. It's a platform for traders to put their accounts on, and they can do analysis on their accounts to get all sorts of statistics. It's free. Our idea was just to find undiscovered trading talent and build a database of that. And so that's a short work career. And along the course, I've written 10 or 11 books. I should keep count better. And 5 of them were along this market wizard theme, and I've done some analytical books as well. So that's about as short as I can make it.
That's fantastic, Jack. And it's the reason your career as an author stands out is you've taken time to get to know and try our best. I wouldn't say maybe to take apart, but just to listen to people who've had successful trading careers, and there are common threads that come through. And so, while a lot of people, let's maybe begin here. And I'll throw out a philosophy I think is true, and you can say, nope, Andrew, that's not what I found, or yeah, there's some credence to it. But when a person first decides to trade or invest, whether they're, whatever style they're going to do, I'll tell you, I think a lot of people do it because they say, well, I want to go out and make a lot of money. But I will tell you that it's the people that tend to fall in love with the process, perhaps more than the result. I think Warren Buffett's a great example of this. He doesn't need to get up in the morning at age 90 and go to the office. He can go anywhere he wants. He'll never spend all that money. If his goal is to just get rich enough to have a Lamborghini, he hit that stuff to where life is in terms of purchasing power. He hit that decades ago. He loves the process. Can you speak to that as you spoke to these guys? Are they all just in it for the money, or is there a passion for actually enjoying the puzzle of the market and figuring it out.
Yeah, I think you're spot on, and it's actually you could have been quoting my book, part of it. One of in a concluding chapter, I have something like 46 different lessons, and one of them is, if you want to succeed in the markets, you gotta love the endeavor. Almost all of these traders, you could tell this is like a passion. This is something they want to do. Quite a number, I find that it's common that a lot of these great traders that I end up interviewing got interested in as early in high school, sometimes even preteen, in markets. They just had something in their DNA,
Yeah.
And it also comes across in language. So the language they use. I still remember, when I interviewed Bruce Kovner of Caxton, he called the markets a three-dimensional chess game. Jim Rogers talked about it's like the markets is like a puzzle of 10,000 pieces, and they're always taking out some pieces and throwing in new ones. So what is that language? That's the language. It's the language of games, right? So to them, the markets are like a game, a challenge, and it's because they love doing it. That's, I think, one of the key things that's important for why they're successful. Very rarely is someone that I can. In this book, there is one person. I think it may be the first person that I've interviewed in these Market Wizard books who actually said, "Yeah, I kind of, graduated college. We want to be a trader. Figured, we want to make a lot of money." I'm not sure that he didn't really have a passion for it, but he said that, and I got to take him his word. He's enormously, extraordinarily successful. So I guess everything has its exceptions, but I think most people, if they go in it for the money, they're not only not going to make the money, but they're going to lose.
That separation of process from result, my wife is a fitness nut, and for some twisted, sick reason, she loves the gym. I'm sure she loves the six-pack abs, and I'm sure she loves being in shape and all the health benefits, but she actually just loves lifting things that are heavy and sweating. And I think there's a lot to say to that for trading. Let's talk a little bit about psychology. There are arguments that I think are kind of silly. You've got guys like Jim Simons, who is a quant trader. You've got Soros, who will sometimes employ technical analysts. You've got Buffett, who's probably the ultimate fundamental analyst. Whether you're technicals or quant or whatever, I think that's less of an argument to what is your ability to deal with emotions, and what are the psychological traits that you've found in these successful traders. And again, I'm unabashed in telling everyone there's certain staples that you have in your investing library, and one of them now is Unknown Market Wizards, the best traders you've never heard of. Go to Amazon.com and get that, and you can get greater insight. What is the psychological trait or traits that you saw as you've interviewed so many successful traders and investors?
First, let me say, when I wrote the first Market Wizards book, I didn't know I was going to be writing a book about psychology.
Yeah.
More psychology of the markets in some respect. And in every wizard book that I've done since then, consistently, this comes up time and time again. In his latest book, Unknown Market Wizards, quite a number of traders talk a lot about the importance of the mental state, emotional, being in an emotional calm place, whether it's through meditation or breath work or whatever it is, but it is really critical for them to be super calm and not have emotions in trading. And there are a lot of other elements of that deal with the psychology. It has to do with discipline to follow whatever your methodology is, not to be able to take losses easily. It's part of the process. There are all sorts of elements that really deal more with emotion. And I'm talking about discipline. The interesting thing is, I think now with this book, there have now been, I think, 4 ex-Marines that I've interviewed. And I don't think that's a coincidence, because I think that the discipline that the Marines instill is kind of like a really critical trait to succeeding as a trader. So people think it's about finding some sort of methodology, but really to be successful in trading, it emotional fortitude is more important, and of course, as is risk management, two things that people tend not to focus on. So everybody's worried about the method, and you have to develop a method. So I'm not saying you don't, but it's not just figuring out how to trade the markets. You really have to have the emotional elements and the risk management, and those two things probably are more paramount than the actual method.
We have limited time, but it's worth dwelling and taking a deeper dive on both of those elements, and just conversing with each other on both of those, discipline, your temperament and risk management. And the thing I'll often tell people, Jack, is I'll say, look, you've got at least two gaps in your life. The first gap is the gap between ignorance and knowledge. When I've looked at the mistakes I've made, some of them have been delving in securities or in strategies that I was not knowledgeable enough in. I was a victim of ignorance, and of my own ignorance, I should say, a victim of myself. And so the first one is education, and that's usually where I hang out, is saying, hey, let's learn about this. But I will tell you that is deceptive in a person's mind if they think, well, if once I get the knowledge and the recipe, I'm okay. Because the second gap that is in one's life, at least the second gap, is a gap between your knowledge and your behavior. And I think the thing I would tell everyone is, perhaps you're like me and you've got a couple extra pounds you'd like to lose. Well, you probably already know how to do that. You quit eating ice cream and you get on a treadmill, and there's no secret to that. It's not an ignorance problem, it's a behavioral discipline problem. And so, we need to have education, but I think you said it really well. People are trying to find the right methodology, and once I have the methodology, I'm fine. I think of the casino, where the gambler exclaims when they win and they exclaim in despair when they lose, but the guy running the game on the other side, he's just like cardboard. He's born without a personality, following those rules. So I wanted to comment on that. And then secondly, you mentioned risk management. I think people believe that great traders predict the future, like the Oracle of Omaha. Actually, the truth is they just know how to handle and limit losses. True? That's the bigger thing than predicting, because the defining characteristic of the market is unpredictability. Therefore, the defining characteristic of a great trader is dealing when things go strangely. Yes?
Yeah, so the thing about prediction, you're right. Yeah, I think among the public is this perception that people are really good at the market, so they really kind of predict what's going to happen. In fact, I have a quote in the beginning of this book. It's from Galbraith, and it says there are two types of forecasters: those who don't know and those who don't know they don't know. It's not about prediction. It's what it's really about when you get down to method, whether you're purely fundamental or purely technical or some combination of the two. It's about finding those points in the market where whatever your methodology is, it's telling you there's a better than normal chance here that the market's going to go up or down, and that you can make, the amount that you can make if you're right is some multiple of what you have to risk on this trade, to prove that you're wrong. And those spots only come along sporadically. They're not there all the time. But it's a matter of finding those points, whatever your methodology is. And then if you're wrong, to really get out quickly according to your game plan. It's not about predicting. You're not saying, well, you're making a short-term prediction. You think it's really, the word prediction is wrong. It's probabilities.
Yes.
What you're basically saying here, at this point in time, I think that there's an asymmetry in the probabilities of what's going to happen. And I've got a method that I'm more right than, over time, if I apply this method and pick at these points, I will make money. It doesn't mean you'll win the percentage, more than you'll lose. You may lose more than you win in terms of number of times, but you're winning more when you win than you lose when you lose, and that's a very critical element. So it's really a matter of then find those points, and a number of traders talk about what they feel good about is their ability to just take losses quickly when they're wrong. and they will attribute their success not to the fact that they necessarily pick these points or get these good trades, and they don't so much remember or think about these great trades. It's what they know is when they're wrong, they know how much they will lose. They're out quickly.
I think that might be the single most difficult emotion to deal with, is the ability to understand what a good loss looks like. People really struggle to lose. And, back to a casino example, if you're at a blackjack table, maybe the house, I don't know what the house numbers are, but it's probably 51% to 49. It's probably that close. And they just let that thing run. That means they're going to lose almost half the time, but they have a table limit, or they're going to limit that loss at a certain amount. And it's just so difficult for people to deal with loss. And I get frustrated in my industry, Jack, where they'll parade around, my method does X, Y, Z, we've had this success and that success. Well, that's not going to translate to a person who's not emotionally sound. And so when people ask me, well, how do you think I'm going to do, when I trade, Andy, if I follow a certain methodology, I always say, I have no idea. You could lose everything you have because the emotions are so important. So, you made a great insight. Well, I went out probably to start the first book saying what methodologies were powerful, and you walk away from that first book saying, wow, this was a book that had a large component of psychology. Is that something you think these guys are born with genetically, that they just have an even temperament? Or do you think, and can you find examples of people who struggled with it and then found that discipline later on?
No, they're not. Maybe some are, but probably for the most part they're not. It's something that has to be learned. And I'll give you a good example. In this particular book, there's a trader who I call the contrarian, because that's what he does. He really just wants to go opposite what he perceives to be the broad side. When there's a lot of sentiment on one side, he wants to be on the other side. But he had to marry that reverse management. Now, this is a particular trader which, like some of the traders in the first book, blew up a couple of times before he finally succeeded. Yeah. And so he went through early in his career, he kind of, turned 100,000 into $1 million, and kind of did that 2 times, and each time blew it. One time, at least he bought a Porsche, so when he kind of blew the account out, at least he had the car left, which was the only good thing, is that he had bought the car, so he had something left out of that. Otherwise, he would have lost that, that money too. And it's interesting. Then he talks about, he eventually found, he understood that what he was doing was fighting the markets without any risk management, and just have to. So like he's short in the late 90s, and the rational exuberance. Well, that can carry on. He might have been wrong he might have been right along the Greenspan, but it was a couple of years early. So you can't just go. You can't just have positions on with no risk involved. So he learned that lesson eventually, and then he talked about how later in his career he would find these people, and they would be indicators. Like he talked about one guy who was always bullish for market, and one time, like in fact recently when we had the crash in March, this particular guy said, the market hasn't capitulated. He heard that, he went long. It's sort of like, but he said, it's not that I'm smarter than this guy. It's not that, it's just that he's me 20 years ago. He's doing what I did. So he kind of learned from that. So it's not necessarily you're born with it. You basically have to learn it.
How many? I probably could go back and count it. You might not even know off the top of your head. But with the Wizard series of books, how many interviews do you think you've done that made it into the books? How many traders have you interviewed now? Yeah,
that made it into the book. I would say roughly about 75. Wouldn't be probably too far off. I've done, interviews that didn't go into the book, so not every interview gets into the book. I don't know how many of those I've done, but of interviews in the books, I'd say it's probably roughly, I'm using kind of an average of maybe about 15 per book. This one has a dozen, but I think there are a couple that may have more, so it depends on the length of the interview.
my listeners know where I'm going with that question if they've ever listened to me before. One of the things that I do is I say people that are interested in success buy books. People who are committed to success get mentors, but you always start with the book. And the reason I always talk about the 75 traders is I just tell a listener, and they know where I use this all the time because it's a great way to help people realize how valuable unknown market wizards will be to have it, in their office and in their home office and reading it, is if you had a chance to take Jack Schwager to dinner tonight, where would you take him? Number one, if you had a chance to interview Jack, who's spoken to all these traders, I'd find the best steakhouse and get Jack to come, and I would fit the bill just to have an hour, to glean this knowledge. Well, there's a lot more than that in this book, Unknown Market Wizards. And by absorbing these things and spending time working on yourself and looking at this psychology, I personally believe that you can accelerate the process. I believe that it does help. And I think it's something that is always maintained, much like my wife goes to the gym to maintain. She didn't just go there once, get in shape, and she was done. She maintains this. And for a person who's emotional like I am, very passionate about life, it's critical that I speak with people like Jack, that I read these books to keep my temperament even and keep that in shape. Let's talk about risk management. What do you see guys doing to manage risk?
There are a number of elements to it, but the most important one, I think, I'm going to quote I guess Bruce Governor from the very first book, but a number of traders have made the same point. And basically his line was, know when you're going to get out before you get in. Yeah. And that's so critical because that does a couple of things. First of all, if you define where your exit point, where are you going to be wrong? Decide that before you get in. But if you do that, you're basically kind of defining what your loss is going to be. You're not going to find yourself having the market go down to that point, say, oh, well, yeah, but I think, it's probably just, if I get out here, it's going to be the bottom. I'm going to give it a couple of more days, and then it goes more and more. And she's okay, I'll get out if it gets back to even. And, and you can just lose a large chunk of your money on one bad trade. But if you decide where you're going to get out before you get in and either put in a stop to assure it, and or just you have the discipline to execute at that point, whatever. But if you stick with that, then you've defined what your losses on any trade, and you can control by not allowing too much of a loss in a single trade. You can avoid taking really large losses. So, that's the most important thing. Also, by doing it before you get into the trade, there's one thing that you have before you get into the trade that you immediately lose as soon as you have the position, and that's objectivity. Mm-hmm. So when you're not in the trade, you can think rationally. You can say, well, okay, this is the reason I'm getting in, and I think it's going to go from here, and this is the reason. But if the market went here, it would look like I was wrong. Okay, I'm going to get out here. So you can make that. But once you're in the trade, you start all sorts of rationalization saying, well, yeah, this doesn't look quite good as good as I expected, but there's this other news item that's come out, and it should hold because of that. I think it's, I read this article, and that sort of also supports my opinion. You start finding all sorts of excuses to stay with the trade. So before you get in, you have objectivity.
That last 2.5 minutes is as valuable as anything that's ever been spoken on this podcast. It is huge. Let me just endorse that to the best of my ability. When we teach our Ultimate Options class, we teach preparation more than prediction. What I mean by preparation is we say, okay, here's a certain options trade, for example, and we start with delta, and we say, okay, delta can go, you can have the price move, basically. So there we have 3 directions. We have up, down, and sideways. So we have 3 plans out of the gate that if the delta changes, if it goes up, down, or sideways, we already have how we're going to act, at what prices, at what levels, and we're preparing, not predicting. Then we look at things like other Greeks, like volatility. Okay, if we had a volatility crush or volatility increase, what is our plan for volatility? And we go through each of the Greeks and we say, what are the things that can change this trade? What are the directions it can go? And that's powerful because now you're not worried about earnings and news and the Fed. And because anything can, they say, Andy, what about all the electronic trading, high frequency trading? What about Corona? It doesn't matter what makes the chart move. If it moved, it moved. And if you are prepared for any move in that chart, you now have 3 predictions in essence. Oh, I predict this, I predict that, I predict the other, and I'm prepared for any of these things. There hasn't been a more important 2 minutes on the podcast in risk management. And then keep your position sizes reasonable. If a position can turn into a monster that scares you, the monster was too big. These need to be little puppy dog monsters. So fantastic stuff. Let's talk about the argument or methodology. What have you learned about traders from fundamental analysis, technical analysis, quant trading? What are the styles you've seen? And do you see one that has been more successful than the other?
Yeah, I'm going to quote myself here. In one of my books, I used the line, there are a million ways to make money in the markets. Unfortunately, they're all very difficult to find. And the point is there's no right methodology. For some people, it's going to be like some sort of fundamental approach. For some, it's going to be some technical approach. For some people, it's going to be trading futures. For some people, it'll be trading options. For some people, it'll be currencies. Some people, stocks. Some people may want to be trading for a short-term time period. Some may want to hold positions for long-term. I mean, everybody's going to gravitate naturally to some different style. And so it's not like there's a better approach. In fact, I've interviewed people which are completely diametrically opposed, yet they're both very successful, So I think of Marty Schwartz in the first book saying, I spent 10 years as a fundamental analyst, lost money every year, and I got rich as a technician. And then you find any of other people who say, like technical analysis is a bunch of mumbo jumbo black magic. Yeah. They both, and both camps will believe in that, yet they're both making money. So what does that tell you? It tells you that there is no single right approach, but there is a single right approach for each person, which they have to discover. And it may not be the first thing that they think is right. Sometimes it's an evolutionary process, and you have to go through changes. But the key is it has to be something that resonates with your personality. So if you're skeptical, if you think charts are a bunch of nonsense, then technical analysis is probably not going to be a thing that's going to work for you. So it has to be something that fits what your beliefs are, who you are, what you feel comfortable.
That's an important message, Jack, because for years the fundamental analysts would say, look, you can't use technicals. It's like reading tea leaves. You can see in those charts whatever you want to see. But I think the biggest thing that has validated technical analysis has been artificial intelligence and automated trading, because when you're trading in nanoseconds, you're not using fundamentals, right? The fundamentals didn't change in a nanosecond. And so those chart readers and those machines do work. And I'd say that, I don't know what, you probably know better than me, but I'd say 80% of trades now are made by machine rather than man. And they're not using a quarterly report to make those decisions. They're using price action for sure.
Yeah, but it's a different type of technical analysis.
It is.
So, to me, high frequency trading, something like that, to me that's more like playing the middleman role, essentially trying to take, money off the bid-ask spreads in the right way and
arbitrage
and playing positions against each other and having speed and being the first order in there and, things like that. But it's not the type of thing that would apply to the ordinary trader.
No.
There are traders, there are traders of this book, who, in fact, one trader just off the charts. I mean, he's not doing any systematic, no system, just his experience in reading charts and having very, very, very rigorous risk management is what accounts for success. And in his 30-plus years of a track record, he's averaged over 50%, doing nothing more than trading off of the charts.
I think you could find failures and successes in every of these million styles that you talk about, million ways to do it, just hard to find them. And maybe it's analogous. I always have to weave in some basketball analogy, Jack. I'm a broken down basketball player, but if you look at national champions, Duke had a great man-to-man defense in the day. Jim Boeheim plays strictly zone. You have Tark from UNLV who had an amoeba defense. You had, great guys like Dean Smith that had a run and jump. And so it's really the buy-in to that system, the athletes that they had, and sticking to it and really developing what they did very, very, very well that allowed them to win. And it's silly to say, well, zone's better than man and man's better than zone, because you can win. Like you say, there's a lot of ways to win a basketball game. There's a lot of ways to trade effectively.
Curry isn't great because he drives for the basket.
You got to respect everything he does.
So you have to find your methodology.
Unknown market wizards, the best traders you've never heard of. You can also get info at jackschwager.com. I absolutely love this venture fund seeder, because many people might not realize that with the Series 65 and some organization and a good team, you could bless a lot of people's lives with your talent. And it's not just about you in your trading. You can actually help people, and that'd be a great gift. You look at the people who were in Berkshire Hathaway early. You look at the people in Jim Simon's fund. Those people get blessed by your talents. So be able to connect people with capital and let them do what they were called to do is absolutely fantastic, Jack. What a great, great venture. You've been so gracious with your time. Last words to the beginner trader, the person who's saying, hey, I'd like to take a greater role in this. Coronavirus, it seems that we're having more volatility. There's a lot of uncertainty with what will happen with the fiscal and monetary policy seem to be at some pretty big extremes, at least from what I've seen in my career. If someone's thinking about taking more control and being a more active participant, what's your counsel? Where do they start?
Yeah, so trying to make this quick. Basically, it can be dangerous for novices because there's a tendency to think that you know more. That you don't have an appreciation for what you don't know, right?
Yeah.
So the first thing, I agree with you. What you said before is like the first place to start is read books. Read lots of different books, whatever seems appealing, and find what kind of resonates, and then try taking some of those ideas and make them your own, and try watching the market and applying them. I always advise people to start with paper trading. It's not the same thing, and you don't get the emotional thing. But hey, if you can't make money paper trading, then there's no reason you're certainly not going to make it if you're trading for real money. So the early stages are just learning, figuring out an approach, seeing if it works, and then if it seems to be working, take a small amount of money. Keep in mind that most people on their initial venture lose, so don't take all your money that you can risk and do it on the first time. Start off with a small amount, and if you get blown out or you lose too much to continue, stop for a few months. Get back to a point where you're ready. Try it again, and basically only when you feel that you have confidence and an edge should you start committing more any more substantial amount of money.
What I think I heard you just say is respect the market. If you're going to get into it, I think that's what I heard you say. Respect this and understand that. Yeah, there's been people doing this for many, many years. I remember I was on a flight to Atlanta once, and I sat next to a surgeon who spent the 4 hours telling me how awesome and smart he was and the 20 years of school he was in. And then when we announced the approach, he said, "Well, what do you do?" I go, "Well, I have a little education company. I teach people to trade." He thought in 5 minutes I'd be able to give him some advice to help him with. He had no respect for what the traders do, only what for the medical guys do. So I appreciate it. Jack, I'm kind of an emotional guy, but without getting too mushy on it, I just need to thank you personally for the impact you've had in my life. You were one of the first authors that I was recommended to read with the first Wizards book. And as I read those stories, especially the ones that really helped, I saw guys blowing up their accounts. And I thought, wow, these guys are tough and human, and it was just invaluable. Your contribution to the body of literature and knowledge is absolutely significant. And so just a personal thank you for not just being on the podcast, but for the work you've done to help guys like me, educators like me. And I'm a student way before I am a teacher. So I just want to pay homage to you and the work you've done. Thank you so much.
I appreciate that.
You've been listening to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where investing's made simple. Hope you enjoyed our interview with Jack Schwager. Hop by Amazon.com. Pick up your copy of Unknown Market Wizards, the best traders you've never heard of. Hope you enjoyed the podcast. We'll see you next time.
You've been listening to the Cash Flow Academy podcast with Andy Tanner. For more information on investing made easy, go to thecashflowacademy.com.